Give you another example. So this is a 1-to-1 risk reward ratio as well in a different trade. And this is risking about 131 points to make about 131 points. And this candle right here, this was the market open candle of the day. If you were to enter after market open and do a 1-to-1 risk reward ratio like this, you know, it would have taken you probably we entered on this candle, and these are 5-minute candles. So 1, 2, 3, 4, 5, 6, 7. It would have taken you 35 minutes to make 131 points. That's great. You could be done for the day. You wouldn't have to trade anymore. And that's that. You know what I mean? And it would have only taken you 35 minutes. This is the goal. This is the goal in trading. And let's implement the same strategies that we were talking about with the percentage wise. If you did this with a $10,000 account, this is a $200 trade. That's a $200 profit, right? A $100,000 account though, this is a $2,000 profit. So, you know what I mean? It's all relative. You might be able to stop trading after $200, but you might not be able to. You might want to get back in, and then after getting back in, you end up losing whatever you lost before. But if you have a $2,000 gain from this movement right here, and it took you 35 minutes to make $2,000, most people are going to be okay with that. So that's why these 1-to-1 risk reward ratios, you can definitely implement them and they're good. So this is that same trade as the one I just showed you before, but instead it's with a 1-to-2 risk reward ratio. So in this case, you're risking 131 points to potentially make 262 points, right? And in this case, the other one took about 35 minutes to go from entry to profit, right? And that's that. In this case, with this 1-to-2 risk reward ratio, instead of it taking 35 minutes, it took about 5 hours for you to make this profit. But you also made double the profit. So if you're able to be patient throughout the day and you're like, all right, I'm good. And what you could even do in a situation like this is enter right here. Trade starts to go in profit. The moment you're in profit, you can just move your stop loss to right here to break even. This is what most traders do. Once they're in profit, they're gonna move their stop loss up so that it's now a free trade. If it ends up going against you, then you're gonna get stopped out, but at least you're not gonna lose any money. And in this case, had you done that, you would not have been executed out, and price would have just been going up because it was a trend day. So in this case, you would have made a good amount of money this day. It just would have taken you 5 hours versus the 35 minutes. But if you're able to be patient enough to hold this, then, like I said, instead of just making $2,000 in the day, now you made $4,000 in the day, right? If we're using the 2% of a $100,000 example for like risking. Or if you had a $10,000 account, instead of making $200, then now you just made $400. And $400 a day, trading wise, comes out to like $104,000 a year. You can live off of that. That's something that you can do that. You know what I mean? And that's why implementing a higher risk reward ratio with a smaller account allows you the opportunity to actually make more money. You just have to be more patient. And that's an example of the 1-to-2 risk reward ratio. So now let's go to 1-to-3 risk reward ratio. You see how much longer this took? Right? This started at, once again, this was the market open, right? This is the candle right after market open because this candle right here was the market open. It almost took you a full day to have, if you were going for a 1-to-3 risk reward ratio, it almost took you a full day for your trade to get executed. But if you're the type of person where you're just trying to take a couple trades per week, this is perfect for you. You know what I mean? You're risking 131, that same 131, but now you're going to be making what? 393 as profit, right? And in this case, it would have happened. It just would have taken almost a full day to be able to do that. But if you're able to implement a strategy like this, now on a $10,000 account, instead of making just $200 in a day or $400 in a day, now you're making $600 in a day, right? So, I mean, and that's just with a $10,000 account. If you have a $100,000 account, instead of making $2,000 in a day or $4,000 in a day, now you're making $6,000 in a day. And in that case, if you were to make $6,000 on a trade, you could be done for the week if you really wanted to. Like you wouldn't have to do anything else if you didn't want to. $6,000 a week is solid. $6,000 a week comes out to $312,000 a year. So if you do one of these trades every single week and you had a $100,000 account, you know what I'm saying? It's all relative. It's all percentage-wise. It's all percentage. But if you do this with a $10,000 account, you're only making $600. And, I mean, $600 is still good, but you're not able to live off that, right? You just have to do this over and over and over and over and over and over and over again. I hope this gave you an idea of what risk reward ratios are and why they are so important. You really can't go wrong with a 1-to-1 risk reward ratio, a 1-to-2, or a 1-to-3. It's just all dependent on your goal. The account size that you're trading is also going to affect that decision because, like I said, it's easier to be okay with the 1-to-1 risk reward ratio if you have a bigger account, a $100,000 account, because you're making, if the same 2% example, you're making $2,000 on it. Instead of just doing a 1-to-1 risk reward ratio on a $10,000 account and only making $200, right? It's easier to do it when you have a bigger account. I will say this though, a lot of this comes down to your psychology and patience. You can do a 1-to-3 risk reward ratio on every single trade that you enter. You just got to understand it's going to take a lot longer for this trade to be executed versus a 1-to-1 trade to be executed. There's another benefit that I haven't mentioned when it comes to shooting for higher risk reward ratios. In this case, you were up all day long. You literally were not down at all. But in this case, you could have just got out right here. You didn't have to wait until it got up here. You could have got out in this range or after this low started to happen and you're like, I don't know if it's going to go any lower. I want to get out. Even though you didn't hit your 1-to-3 risk reward ratio, you're still in profit. You know what I mean? You're still in profit. So you just got to take it. I'm telling you, man. But taking the profits is the name of the game. It's so frustrating when you see your profits, you see your trade in profit, and you just let it go against you. And you're like, man, I was up this amount of money. Why didn't I take it? You don't always have to wait until your trade is actually executed, and you hit your exact 1-to-3 or whatever the case your risk reward ratio is. You do not have to wait for that. But if you are able to be patient enough to wait for those situations to happen, you have a great chance of making a lot of money. A lot of money. Always know what your risk reward ratio is in any given trade. Always know the percentage of your account that you're risking on any given trade. Always know your risk. Okay? Always know your risk because profits are amazing, obviously. The goal is to get profits. But losses suck and they're a part of the game, and you have to understand that if you can minimize your losses but maximize your gains, you're gonna win. You're gonna end up on top. And that's where these higher risk reward ratios come into play. That's maximizing your profits, but minimizing your losses. Before I end this video, there's one last thing that I want to throw into here, and that's stop loss profits. A stop loss profit is a concept that I also explain in my stop loss videos, but I have to mention it here because it's worthy of being mentioned. So let me explain what it is. On any trade, but especially on higher risk reward ratio trades, example 1-to-2 or a 1-to-3, it is wise to implement a stop loss profit. You can do this by moving your stop loss to break even after a significant move in profit, meaning that you now have a risk-free trade. And what I mean by that is, let me show you. You see this example right here? You see how price moved up, boom, and we're all the way up here this was around 12 o'clock. So this is when market closed right here pretty much, is at this point. At this point of the day, because you're already up so much in profit, even though this was the original stop loss point, you move it up. Move your stop loss order, move it up at least to break even. Because hypothetically speaking, if price comes down and all the way back down to this point and executes you out, at least you know I made some profit. Even if it's only $1, at least I made some profit. But if you wait until your original stop loss and you're trying to respect your original stop loss, it's going to annoy the piss out of you, bro. Because you're going to see that you were already up multiple hundreds of points in profit. And then you have a move down that is multiple hundred points down. From this point right here all the way down, that's over 300 points. And you don't have to risk it off of your initial entry point. You could put your stop loss up here. You could put it up here if you want. It doesn't matter where you put the stop loss in profit. Just make sure that once you're in profit and you're significantly in profit, move your stop loss up. I mean, you can move it up after the next candle if you wanted to, in this case, because this is the candle that you entered in right here at this top. After this candle, after this blast up above the entry point, you can move your stop loss right here. After one candle, I'm not telling you to do this. I'm saying that you can if you want to. And in this case, you would have never been executed. You still would have been okay. But you know that I'm safe. It doesn't matter what happens. I have a risk-free trade now. But if you don't move that stop loss up and the price goes against you, then you're taking an actual loss. But if you move it up and price goes against you, it's just a break-even trade at that point, or potentially a small profit trade. And this is what I was just saying. It doesn't matter where you end up putting your stop loss profit, as long as it's going to end up with you profiting on your trade. So once again, in this case, if we're going off this price action point right here, I'd recommend moving your stop loss to like underneath here at least, so that even though your initial risk reward was a 1 to 3, in this case, if price goes against you, you're at least getting a 1 to 1 risk reward ratio. You know, you're not hitting your 3 goal, but at least you're securing profit, and it's a significant amount of profit. The worst feeling is seeing your trade being up hundreds of points in profit just to see the trade go against you and end up hitting your original stop loss. If you implement a stop loss profit once your trade is in profit, then at least you won't have to worry about taking a loss. Your original take profit point might not have been hit, but at least you secured your profits. Any profit, even if it's $1, will feel better than any loss that you may take. And that's what I'm trying to say. On any one of these trade examples, once the trade goes in your favor and it's at a significant point of profit, you need to move it up. You need to move your stop loss up. In the first example that I showed you of the risk reward ratios, in this case, had you done that, had you moved your stop loss up once you were in profit, like you would have been executed out right here. Right? And that's the annoying part that you have to realize too whenever you are doing a stop loss profit. You could easily be wicked out and you could get executed out of your position, but at least you still got executed in profit, you know? So that's why stop loss profits are important. I'll leave the decision up to you whether you want to implement a stop loss profit or not. I can only give you suggestions of what you potentially might want to do, but it's ultimately up to you. If you don't want to have a stop loss profit and you want to respect this range, if you want to respect this stop loss, you do that. You do whatever you want to do. But in this case, if you were up in profit at this point, and instead of price going up higher like this, let's say price went down and you never moved your stop loss up, that's like a 400 point move down to this point, right? You were up all these during this whole time period. Multiple hundreds of points. You could have got out in profit just to secure something. But if you don't do that and you just respect your original stop loss, you might take a loss. But that's why stop loss profits can be very helpful for you, and they're a good risk management strategy to implement whenever you are up significantly on any trade. Doesn't matter what trade it is. On any trade, if you are up significantly, you need to move your stop loss up so that you don't lose money and you at some point are in a risk-free trade. Like, obviously there's still risk because it could be the difference between you making $10 on a trade or $10,000 on a trade. But you're going to feel better making $10 on a trade than losing $1,000. I'm just going to say that. It's going to feel better to make a profit, even if it's a small profit, than to take a loss. But what you want to do, that's your prerogative. That's up to you. Just saying, stop loss profits help with higher risk reward ratios. Like a lot of my other videos, I know that this was a long video, but you have to understand your risk management strategies and you have to understand your risk reward ratio. This will keep you sane. These risk reward ratios will keep you sane. They will keep you in the game and understanding the percentage of the account that you are risking. Understanding this is critical. It's critical to your trading success. Do not risk a significant amount of percentage of your capital on one trade or during one day. Do not do it. Don't do it. You will lose. Don't do it. Once again, just to mention this one more time, if you were doing just 2% per day, you'd have to lose 50 days in a row to blow your account. Most likely, you're not going to lose 50 days in a row. Probably not going to happen. It could, but probably not going to happen. And if you go lower than that, and if you risk 1% per day, you'd have to lose 100 days in a row. And if you risk 0.5% of your account per day, you'd have to lose 200 days in a row. That's almost a whole year. You're not going to lose every single day for a whole year. It's not going to happen. That's why the risk percentage of your account is so important. Understand this. Please understand this. Please, 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 please. Understand risk reward ratio, risk management strategies, and how much you're actually risking on a trade. Please, I cannot emphasize this enough. Understand this, please. Risk management. Risk management is the name of the game. It's the name of the game. I got two things to mention real quick. Number one, I am releasing the full course that this video is a part of. The full candlestick price action trading course is on YouTube right now. It's over 18 hours of free trading game. There are so many golden nuggets in this course, you're not even going to believe that it's free. But I believe this information is so valuable and so helpful for everybody. I just want it out there, honestly. I truly feel like everybody has the potential to benefit off this information because if you can read a chart, then you can profit off of it if you know how to read it with the candlesticks. And this information that I'm giving you guys, it can be used to trade on any sort of candlestick chart, right? Whether it's Apple's candlestick chart or Tesla's or gold's candlestick chart or Bitcoins or XRPs or euro versus the dollar or British pound versus the dollar, other stock markets around the world. It doesn't matter. If there's a candlestick chart, you will have a severe edge in reading it. I truly believe that with dedicated time and practice, anybody can become successful in trading. Anybody, like a grandma can literally do it. It just takes a lot of time and effort to learn how to do it. But understanding candlestick price action will severely help your trading journey. It severely helped my trading journey. I literally learned it, and a month after I learned candlestick trading, I became profitable. I passed my first prop firm account. So that is how impactful this information is. And I'm giving it to you for free. A lot of it. The second thing I want to mention is I am releasing amazing workout programs. As I've told you guys before, I am a certified personal trainer and a certified nutrition coach, but I've also been going to school for personal training. And shout out to my instructor, Paul, because he's given me hella golden nuggets throughout my whole journey in school. Because of that journey, I now have workout programs that can positively benefit everybody. And I mean it, like, let me explain. I have a full body muscle building program, aka a hypertrophy program. I have a fat loss program, so if you want to lose 20 pounds, you get on that program. I've got a core program that'll help you develop a six-pack like this. And I got a booty building program if you're trying to get your Kim K on. And they all incorporate a little bit of cardio because that's also very much needed in everybody's life as well. I'm also providing nutrition guides. I'm also providing recovery guides. And this is just the beginning. It's only going to grow from here. I already know how impactful it's going to be for other people because of how impactful it was for me. Because look at this picture of me from last summer and look at this picture of me from now. This progress was specifically from my muscle building and full body workout program. One of the beauties about working out and being active is it does not matter what age you are. You honestly have to do it. You need to be active. So anybody can work out with these programs. As long as you are medically cleared to work out, these programs have the tremendous potential to positively impact your life. And I'm so serious when I say this. The number one thing that you must always remember throughout both programs, whether it's the trading program or whether it's the workout programs, you must always believe in yourself and your abilities and your ability to achieve any outcome that you want, okay? Because you absolutely can, but it's going to take time, and you need to understand that it's going to take time. But if you dedicate the time, the effort, and the dedication to doing it, eventually it's going to happen. So don't stop. Do not give up on yourself. I believe in you. You got to believe in you too, okay? And you do it with this, and you do it with this. I believe. I want to end this video by letting you know that you are worth it. You are beautiful. You are absolutely everything that you want and need to be. It's already there. You already have it. You just have to realize it. That's really all it is. And always remember, regardless of what you look like, you are beautiful and you are created in God's image. And God is perfect. He doesn't do no wrong. So you are perfect. You just have to realize that perfectness within you. Or another way to say it is you have to understand the confidence and the power that you have within you. My goal is to awaken that confidence and that power within you, because you truly have the power of the universe within you. You have the power of God within you. You got to understand it, man. You are one with the creator. You are a creator. So let me help you create the life that you want to create. Let's do it together. So go check out infinityian.com. Everything that you need is going to be there. And I hope to see you there. I love you guys. God bless you. And I'll see you guys in the next video. Whoosh.